This is an Uncovered Japan Company research report on SBS Holdings, ticker 2384. SBS is a Japanese third-party logistics operator built through more than 30 acquisitions. The headline is unusually simple. Logistics supplies the scale, while warehouse development and sales supply an outsized share of the profit. In fiscal 2025, SBS generated 490.3 billion yen of revenue. Logistics supplied 94% of that sales base, but ran at only a 2.6% operating margin. The much smaller real estate segment earned a 47% margin. That contrast explains both the attraction and the complication in this business. For a customer, SBS can take on a whole logistics operation: warehousing, fulfillment, freight, specialized cold chain work, and distribution. Its distinctive extra step is property. SBS can develop a warehouse for a client, operate it through the logistics network, fill it with tenants, and then liquidate the finished facility. That makes the warehouse both an operating asset and a source of development gains. This chart makes the split visible. Logistics represented 94% of sales in fiscal 2025, while real estate was only around 4%. Yet real estate generated 9.1 billion yen of operating profit, versus 11.9 billion yen for the logistics business. In other words, the smaller property engine made a material share of group profit. The 5-year numbers show the central tension. Revenue rose from 403.5 billion yen in fiscal 2021 to a record 490.3 billion yen in fiscal 2025, a roughly 5% compound rate. But operating profit mostly moved sideways, bottoming at 17.7 billion yen in fiscal 2024 before recovering to 21.3 billion. Sales growth has not yet translated into steady margin expansion. Profit volatility comes from two places. First, logistics operating profit fell from 15.5 billion yen in fiscal 2021 to 9.2 billion in fiscal 2024, then recovered to 11.9 billion in fiscal 2025. Second, property liquidation gains can land unevenly across periods. That means a strong quarterly result needs to be read alongside the property sale calendar and the underlying logistics margin. Cash flow shows why a simple valuation model can be misleading here. Operating cash flow reached 35.4 billion yen in fiscal 2025, but free cash flow has been much thinner and even turned slightly negative in fiscal 2024. Warehouse construction and eventual facility sales shift cash between periods, so investors need to judge a full cycle rather than extrapolate a single year. SBS's strategic advantage is the interaction of acquisitions and property development. Acquiring a manufacturer's logistics arm can bring an established client and operating volume. SBS can then develop purpose-built capacity, making the relationship harder to unwind. Once a facility is fully occupied, selling it recycles capital into the next acquisition or project. The same flywheel drives growth, but also creates integration and property cycle risk. Management's Harmonized Growth 2030 plan targets 700 billion yen of revenue and 38 billion yen of operating profit by fiscal 2030. The pivotal goal is to lift logistics operating margin from 2.6% to 4.5% through better contract discipline, utilization, and automation. The previous plan broadly reached its revenue goal, but missed its operating profit target, so the margin objective deserves close scrutiny. At the report date, SBS traded on 12.7 times forward earnings, around 9% below the TSE Prime logistics sector average. Its expected return on equity, at 13.3%, was near the top of this peer group. The counterpoint is price to book, 1.69 times versus roughly 1.2 times for the sector. The market appears to acknowledge the return profile while still discounting the quality and repeatability of property-supported earnings. The report's 3-year scenarios make the dependency clear. The base case reaches 5,221 yen by fiscal 2028, assuming logistics margin improves only toward about 3.15%, still below the plan's 4.5% target. The bear case assumes a stalled margin and weaker property gains. These are scenario estimates, not price targets, and the one operational metric to watch is still the logistics margin. SBS is a real logistics scale story with a distinctive property profit engine, a repeatable acquisition record, and a supportive industry backdrop. The trade-off is that its core logistics margin remains thin, while property gains make reported profit less even. At a fair, rather than obviously cheap valuation, the research case comes down to execution. Can SBS turn scale into a sustainably better logistics margin? For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.